Hey everyone, so we're going to go through Bitcoin today as we have reached our target order block that we spoke about at about that $42,000 to $40,000 level. So we're going to decipher where we go from here. First thing to note here is that we've basically broke down from the weekly low range of last week and we've basically continued this bearish momentum to the downside. So it's really showing me that we haven't seen any support or buyers stepping in at this level for the moment, so our bias is going to be moving lower. And we spoke about the two scenarios on Friday, Saturday, where we were like, basically, do we move up first and try to test 48.3 and then consequently move up to 53. But if we do not and we see continued weakness and we are not able to hold $40,000, then you need to look for a bigger, larger sell-off. And remember, the bigger the consolidation pattern that we break down from, which we are at the moment, the bigger the next move is going to be. So we spoke about these moves, which led to some pretty significant moves to the downside. So if we now are not able to hold $40,000, I'm seeing lower prices, and this breakdown from this pattern I think is going to be more than enough to break us through $30,000 if we go and reach there. And why would we not basically break down from this $30,000 level? Because that's where the resting liquidity and where the obvious stop loss is. And what do we do in crypto, in particular crypto, is we love to take out basically stop losses, swing the price back to the upside, take out that main liquidity, which is going to be somewhere down here, scare the shit out of people. So that's basically why we're keeping an eye on that key level of $30,000 breaking and maybe loitering down here in between $30,000 and $20,000 for some part of 2022. Now, leading into the weekend, we spoke about this key order block here at about $40,000 to $42,000, which is the daily order block that we want to see support from if we are to move higher. And if Bitcoin is to move higher here, challenge some of the weekly range highs that we got last week and the previous week, to give us a shot of really moving up towards that $53,000 area, we need to bounce from here. We need to bounce from here pretty soon. And I think if we lose this, then that really does open up the door for us to basically either capitulate straight down or basically come down to this area and retest some bearish order blocks up here, and then start to use this and form a bit more of a downtrend and break down from this massive bear flag that we spoke about at the start of last week. So those are the scenarios that we're looking at to the downside if we break $40,000. Okay, but for the moment, so long as we hold here, we might have a chance, although it is looking slimmer and slimmer by the moment. The first signs that we want to give us at this area that we're going to move higher, just dropping it down to the 4-hour time frame over here, is if we draw this line in the sand at $40,000, okay, which is our key area. If we want to bounce from here, we need to start at least forming some kind of consolidation pattern here to move to the upside. We want to be taking out $43,500, and I think this is the reaction area that we are going to be setting ourselves up for, which is also the 21-week EMA is coming in at around this order block over here. So I'm keeping an eye out here if we decide to move higher. Okay, so if we do manage to push up to that area, we've also got this bearish order block above us to contend with. So if we are able to break up here, we want to basically come up here, consolidate, and then push above. But really, again, the line in the sand here is going to be that $48,300 level, which is going to be above that 200-day moving average, to give us a shot of moving higher. As we're halfway through the video, don't forget to drop me a like down below so you can keep up to date with time-sensitive videos as well by subscribing. And without further ado, let's crack on with the rest of the video. The problem with this area at the moment is that we are seeing no signs that support is necessarily going to come in, because we've got these lower lows that we're creating. We're not actually getting any kind of divergences here on the RSI. On the 1 hour, we basically just broke down from some of these potential divergences that we were forming. And if we go on the 4-hour, roughly the same. And if we go on the daily time frame and the 12-hour time frame, you can see that we're basically just moving down. So far we're basically just creating lower lows and lower highs in this shorter term, time frame downtrend that we're in at the moment. And what we want to see is we want to see us take out that $43,000 area that we spoke about and start to create a little bit of market structure moving higher to try to challenge these areas over here, which I think again will be a stumbling block. And just bear in mind that the lower that Bitcoin goes for the moment, okay, the less likely it is for it to swing back to the upside. So we want to see maybe a high volume candle step in where you might be able to use that as a bit of a platform to show us that we're going higher. But as of the moment, we're not seeing anything. We're just expecting area of support around here. Now we are on a descending wedge pattern, which is essentially grinding down and moving down like this. So I wouldn't be surprised for us to get some sort of reversion to the mean at least and pop back to the upside. It just depends if this move that we get up here, basically is able to challenge some of these weekly range highs from last week. We are going to have to wait and see how that pans out. Now that you know that my prime scenario since February has been that we get some sort of low between $20,000 and $30,000. You can go back to my old videos and check that. Nothing has changed since then. We just don't know if we move higher first and then lower, or we basically just tank down from this 40,000 level right away. But the 21 monthly moving average, okay, which has been pretty important so far down here, has been holding us up at about that $38,000 level. So if we come down here, retest this area again for a fourth time and start to close below that, especially on the monthly time frame, okay, and we get some sort of close as well down here, then I think we do move down to the next level. And you can see that the next Fibonacci EMA is coming in hot at about $25,000. So that's again, typically when we break down below key EMAs, okay, and we start to show continued weakness at those levels, we do tend to push down to basically the next level. And obviously that works both to the upside and to the downside. You can see that we also got that back in the COVID crash over here, where as soon as we basically broke down from the 21, we come down and at least challenge that 34, exponential moving average on the monthly. So that will be the next level down here. And obviously we've got multiple confluence with the 200-week moving average down there as well. So yeah, let's basically just keep an eye out for these levels to keep you on the right side of the market.